Hey, ladies and gentlemen, this is Greg McLeod from Elite Traders University and the Forex Cash Machine with another edition of Bulls versus Bears, the weekly market outlook. And my name is Greg McLeod, and I'm your host, trader, and CEO of the Elite Traders University. And it's great to be with you today for this week, starting with the 16th of February 2020. And it's a President's Day weekend. It's Valentine's Day weekend. It's a great weekend, a weekend of love. Okay, but we're gonna get into the markets, and then we'll show you some what's going on in the markets in just a moment. Wanted to go ahead and direct your attention at the business disclosure on our screen. That's going to be coming up pretty soon, and we'll go ahead and take a look at that. Okay. And I'm your host, Greg McLeod, and I'm the CEO and founder of Elite Traders University. I'm a 24-year trading veteran, and I'm a trading mentor, and I traded stocks, bonds, crypto, Forex, and I spent 16 years in public education, but I also was a currency analyst in one of the largest Forex brokers in the world. And I'm also published author. I have articles all over the internet based on my trading. And I'm the creator of the Pip and Run and Forex Cash Machine systems. And I'm really happy to be here to help you become a better trader. And I've helped thousands of traders around the world. And at the end, you'll have an opportunity to be able to work with me in mentorship if you just so desire. Okay, let's get into our analysis for this week. See what's going on, all right? And our agenda for today is very simple. We're going to cover the US dollar index called the Dixie, or the US dollar. It's a basket of currencies versus the US dollar. Then we're going to check out the euro, EURUSD. Then we'll check out what's going on with the pound. See what's happening down under with the Australian dollar. We'll also check out the dollar yen and dollar CAD. And then we'll also check out gold, silver, oil, the S&P stock market index, and the economic news and world news that may impact the market for the coming week. See what traders are actually looking into, okay? So with that, let's go ahead and get to what I'm going to be using. I'm going to be using the My Market Heat Map, which is our arrangement of currency pairs by percentage change. It's a trader's tool, a multifaceted tool that can help you in your trading. And we have a nice little graphic down there. So we're going to go ahead and log in to my market heat map, and I had to restart my computer, so we'll go ahead and do that. We had started. Okay. And let's go ahead and now, ordinarily when the markets are open, it's Saturday right now, and usually we'll have these currency pairs arranged by percentage change. It will actually start moving and flashing as the market is active. But since the market is not active, trading desks are closed. Really, the Forex market never ever closes, but the trading desks are closed. You can't place a trade on a Saturday, right? Unless you're in the Middle East where the banks are open, okay? Because all the banks are closed in most parts of the world. Okay, so let's go ahead. What we can use the My Market Heat Map for other things other than the Forex Heat Map. There's a tab called under Trading Tools, and the first thing we're going to look at is the news. We're going to take a look at the economic calendar, because the news is a big driver for currencies, and so it's really important not to get blindsided by what's going on in the news, especially the economic news. Okay, so coming up on the 16th. That would be our Sunday, the 16th. It was going to be Monday in Australia, and what we see is the rent house price index, and we have some Japanese data, which I really don't look at the Japanese data. Sometimes the market doesn't pay any attention to it whatsoever. Our big one that we want to take a look at is the RBA meeting minutes on February 17th, and that's a high impact item, and it's really going to tell us really the what's going on with the economy in Australia. And they just had a rate announcement. They kept rates unchanged, and so we're going to actually find out what they actually discussed. These are the meeting minutes, okay, the notes from that meeting. And especially we want to pay particularly close attention to see the effects of the novel coronavirus, to see how it's impacted the economy there. Considering they had to do a lot of business with China, and a lot of Chinese cities are shut down. There's more cases. The number of cases of coronavirus have exceeded SARS. And so when you have people staying home and not shopping and buying, that's going to impact global growth. So we'll see if the RBA is going to be have what we call a hawkish tone. Hawkish tone would be bullish for the currency, or maybe they are looking forward to maybe cutting rates, being dovish in the future, and that would make the Aussie dollar weaken. So the traders will be looking at those minutes, see what they actually say, and we can trade accordingly. So we want to look at the Australian currencies. We want to look at what's going on with the New Zealand dollar as well, because they're right across the Tasmanian Sea from each other, right? Okay, so let's go ahead and take a look at the next big item that may be coming up. We've got a lot of UK data coming out on that Tuesday, February 18th. We got the average earnings, claimant count, and the unemployment rate. And so we want to look at the British pound. The GBP is going to be in play. So we want to take a close look at what's going on there. Then also on that Tuesday, and it'll be the day after President's Day, we have the ZEW survey out of Germany, current situation. And the previous number is negative 9.500. They're looking for a worse survey. There's even talk of a recession going in Germany. Germany is one of the biggest economies in the Eurozone, and that could dramatically impact the euro, which is already in a really big down move. I'll show you the charts on that in a moment, right? So we want to take a look at what's going on with the euro. There's also ZEW survey for the entire Eurozone is coming out. They expect it to actually rise from 25.6 to 30. And I mean, we've got some good economic data coming out of Greece. You know, their bonds are actually outperforming a lot of other asset classes in the Eurozone. And then we have economic sentiment coming out of Germany as well, and it is supposed to drop from 26 down to 20. Okay. Later on in the day, we're going to have some GDT price index, and that's going to should be out of New Zealand, negative 4.7 versus 0.0. So that'll be an improvement to go from negative 4.7 to 0 is an improvement. And then we have Westpac. So now you may not know what all these things mean, but all we know is that what you can really focus on, what I teach my students to do, is there'll be an impact. And that impact could be, I would like to be out of the market, or using our predictive indicators, we can kind of like gauge what's going to happen next. But if you don't have access to those indicators, I suggest you stay out of the water until the sharks are gone, and then see where the market happens maybe 15 or 20 minutes after the announcement, and see if the markets return back to equilibrium and are tradable. What happens is people don't even pay attention to this stuff, and then they go, wow, I don't know what happened, my position just got stopped out, must have been news. Well, they give you an economic calendar, which is a powerful tool that we have here on My Market Heat Map. In addition to our heat maps, we have this tool. Okay, let's go and take a look at what's going on the 19th, and I'll go ahead and click that. And yeah, we have lots of UK data coming out on the 19th on that Wednesday. Retail price index supposed to rise from 2.2 to 2.4 month on month. It's supposed to actually drop from 0.3 to negative 0.7. Producer price index is supposed to actually rise from negative 0.1 to 3.5%. That's a pretty huge jump there. That's a consensus. That would be pretty bullish for the pound, because maybe the Bank of England may have to maybe raise rates, or at least temper some of the bond buying, because a jump in producer prices is a sign of inflation, and that's a huge 0.1. I don't know if that's a misprint, but if it comes out to anything like that, we'll probably see a big pop in the pound. Okay, but we'll look at the technicals. Sometimes these are funny. They call them fundamentals. I call them funnymentals, because sometimes the market does something completely out of the blue that you don't even think about. You're like, wait a minute, it's supposed to go up when this data is supposed to be positive or something like that, and it doesn't happen that way all the time. Okay, um, sometimes it's counterintuitive. Consumer Price Index (CPI) is supposed to melt relatively tame, 1.4% versus 1.4%, supposed to be flat. We look on the 19th, lots of Canada data, the Bank of Canada Consumer Price Index, but we do have a red, a high priority item on the 19th as well from the UK. This is Consumer Price Index. Again, it's supposed to rise slightly from 1.3 to 1.4, maybe showing a little bit of inflation coming into the market. BOC Consumer Price Index, and this is the Bank of Canada. This is Canadian data coming out. So we want to keep maybe an eye on the dollar CAD, CAD yen, Euro CAD, and see how these play out. Ordinarily, we would suspect that if consumer pricing, like there's inflation, little nascent inflation, you can see it, negative 0.4% to 0.4%. That's a big jump too, to go from negative 0.4 to negative 0.3, negative 0.2, negative 0.1, then 0, and then 0.1, 0.2, 0.3, 0.4. I just went through like 5 series of numbers, and we're going to end up here. That may be a sign of inflation creeping up ever so slowly. And then we have the CPI index year on year. It's supposed to remain relatively tame at 2.2%. After it being so low for so long, it doesn't, the year on year number is probably not going to move that much. And there's no, but here's Consumer Price Index month on month, 0.1 to 0.1. That's a little bit of a rise there. And that can make the Canadian dollar kind of jump up too, if there's some inflation in Canada. Now we jump to housing starts in the U.S. Housing starts are supposed to drop from 1.608 to 1.39, probably due to the really cold weather in the Northeast, and that's going to slow down house production. So it's probably going to be seasonally adjusted, because of the cold weather. Producer Price Index, X food and energy. I don't know why they take out food and energy. I eat food and use energy. But they said that it's ticking up. It's going from 1.1 to 1.2. So we're seeing some inflation. We're seeing a rise in consumer prices. And he's like, Greg, yeah, every time I go to the store, I'm paying more money for stuff, right? So you already know. They're just telling us stuff that we already, consumers already know. And even in Canada, we're seeing 1.7% rise to 1.8. Anytime we see rise in the inflation rate, usually that means the currency is going to go up because they have to raise interest rates in order to dampen down demand and slow inflation. Okay, so we got building permits. They are actually rising from 1.42 to 1.45 million. And so that just shows that, you got to have a permit before you build a house. So this is going to tell you that there's going to be more construction coming on in the future. And then we go out to the 20th. We have the FOMC meeting minutes. Same thing like the meeting minutes that we have in Australia. The Fed kept rates unchanged. We're going to see if they really think the coronavirus is a threat. Whether they're going to maybe cut rates later on. Be interesting to see what those minutes say. I know Donald Trump, the president's been trying to get the Fed to lower rates, and we'll see. If we start seeing inflation, that's probably not going to happen, right? Now that could tank the U.S. stock market if interest rates start going up, and there could be a liquidity crunch next month. So we could see a pretty sharp move in the market if the liquidity comes out and then there's not enough money in the system. We could see something happen. That's why they're probably having this, want to have some type of a tax incentive to buy stocks, because if the Fed can't buy stocks, they can get people to buy stocks with the extra money they have. We have unemployment change for Australia. These are Australian data that's coming out. And that's coming out. The previous number is 28. We're looking for 31. Unemployment rate is supposed to go tick up from 5.1% to 5.2%. And then you have the People's Bank of China. Now, even though we don't trade the Chinese currency, that will have some type of an effect on Australia. If they keep money loose and easy in order to combat the slowing economy due to the coronavirus, the novel coronavirus, that could have a big impact too. So lots of data. Again, we're gonna have UK data again. Retail sales minus food. See sales ticking up as well. You can see that the data seems to be getting a little bit stronger. And so we got we're gonna go to the 21st. ECB monetary accounts policy, that's going to be high. Again, we'll look at the euro, see if the euro gets a bounce. The euro's been a really bad downtrend, right? And then we finally get some US data. We have continuing jobless claims, Philadelphia Fed manufacturing, supposed to slow down from 17 to 12, and initial jobless claims. Usually that's pretty volatile. That number doesn't. It's an important number, but it changes a lot. Initial jobless claims 205, previous number 210. We're looking for jobless claims to tick higher. And then we have crude oil of 7.45 million barrels. We're looking at a draw of 1.648 barrels. So usually when we have a negative number, it means we're using more than we have in stockpile, and that could mean that crude oil stocks change. Okay, yeah, so could be a draw versus a surplus. And then Commonwealth Bank Manufacturing PMI. So let's go to the last day, which is Friday. And again, Japanese data, kind of discount that. Usually the market doesn't move a whole lot on that. Do have some French market PMI data, and looks like their composite PMIs are dropping. Okay. And that affects they're part of the Eurozone, so it affects the euro. And then we can see that market manufacturing PMI for Germany, we have 3 of those. The PMI, the composite, and the manufacturing all seem to be ticking lower, 54.2 to 50.0, 51.2 to 50, and 45.44. So we can see that Germany's in a downtrend, and since they're one of the biggest economies in the Eurozone, that could be more weakness for the euro. And then we have more European data as well, and all of it seems to be somewhat the same, ticking lower. And consumer price index, though, we see consumer prices actually falling, maybe from a lack of demand. Okay, and that should do it for. Yeah, we've got another retail sales out of Canada. That's gonna be pretty big, 0.9 to 0. If it falls from that, that's gonna impact negatively for the Canadian dollar. And usually, okay. Then we have existing home sales. That's a pretty big one too, right? 5.54 versus 5.48. So looking at existing home sales, maybe to drop again, seasonally adjusted for weather. And then we have retail sales out of China coming out on the weekend. They always release data on Saturdays. Okay, so let's go ahead and get to the charts. I know that you guys suffered through that, but it's always important to be able to know what the minefields are. And I would just go ahead and say, hey, let's go ahead and just check your calendar the day before, and that way you can know you won't be held over a barrel here. Okay. So let's go ahead. We can go here, or yeah, let's go ahead and we can do. Okay, let me go ahead and pull up my chart here. And okay, well, okay, so we'll start with the euro, and the euros are here. That's our first one. We can see lower swing highs and lower swing lows. This baby has been on a tear, and it's just been moving down, moving on down, downtown Freddie Brown. There we go. Okay. So we had from a high of we had a high of like 120 1.2500 way back in January 2018, a year ago, right? And this is where we are now in February. We're near the 1.0 Yeah, one spot 0.86. Let's go ahead and put boom. Oh, one spot 0.833, right? So we're sitting right at a gap that we had back on April 2017, and we can see that that we're finding some support there, but it's, the market seems like it closed before it could even go lower. So let's even squeeze this up a little bit, and we can see where our next levels, key levels of support are. And we can see we have a level of support like 105. I mean, there's really nothing in between where we are and this next level of support, and that's like 400 pips. Okay, so and then we have some minor support there at the 104.91 support. That's from January 29th, and we have more support at the October lows that we saw like in the 103. Okay, and that would give us a full retrace of this. Really, it took us almost a year to get up to 125, and it's taking us like half as much time to get back down. It's like a roller coaster, right? And so we're just looking at prices to even move even lower over time in the euro. Now this is a weekly chart. We can zero in. I'm going to zero in down to a daily chart for the euro. And we can see there's lots of, we did a break, a triangle break we have some rising support coming in from the lows we saw back in September, and we broke that. We broke that support, came back, retested, came back, and returned to the scene of the crime. Right? We came back to the scene of the crime. And we basically just came back and tagged the backside of this trend line here, and then dropped, right? And we could see further price action to the downside. I mean, we may be a little overextended. We're sitting at lows from May, and so we could get a little bit of a rebound. But I think any rebound we see would be something worth shorting. I think we could just take a fib on it, and this thing like retraces up to like maybe 108.89 or 109.38. I'd be nice to take shorts on a rally from this area because it is oversold, and then Mondays usually get a little Mac Monday, get a little bit of a turnaround. But I predict that we probably get up to maybe up around this area and then drop back down, and then we'll look at penetration or tagging at 105. Maybe not all in one day, or maybe it takes us a couple weeks to get there. But I would be a bulls versus bears. I am bearish on this baby. Okay, there we go. Okay, short term bullish actually, but long term or medium term, I would be a seller of the euro. So I'm bearish the euro. Okay, so let's move on down. Let's go ahead. Oh, wrong chart. Okay, let's go ahead and move on down to the Aussie. Okay, Aussie did something similar, and it we had a similar peak, right? And 733, and then we dropped in this unfolding in these lower swing highs and lower swing lows. We're just following a trend channel down, right? A little bit of a rise up, but we're still trending down. And in fact, we go down, we trace up, we down, trace up, and so I'm looking for a price to come back down and test these lows around the 66.60 area, and maybe even penetrate a little bit lower. So it'll be interesting with the minutes out of the RBA. It'll be interesting to see if those minutes are bearish and bearish for the currency, and we can see a further move down. Any rally, I mean, we're in a straight up downtrend. I mean, we're just making lower swing highs and lower swing lows, and so that's pretty bearish for this current. And we can just draw a line, and you can see this is the big tide is down. Now, but we are hitting lows here that we had a while ago, back in August, the fall. And so now we're, it's going to take some energy to break the support that's been put in here. And if we crack that level, though, there is more downside to go. I mean, we have to go back. We got to go back in time to see. I mean, we have to probably go back to a weekly to actually see. And there you go. We've got this area of support that's looking to be retested. Untested support down at 0.6047, and that's like 600 pips away. There's a little bit of support ahead of that at 0.6276, and we are, and you can see here, we're just in a bear market, right? And so we're basically, it's like a giant head and shoulder, head, shoulder, and we just broke a serious neckline. If we connect these swing lows, and there you go. This is Australian dollar for you, and I'm looking at if we can stay below 70.50, this is a while up. But if we get some type of retrace, I'd like to see a bounce. If we can get a bounce. Because sometimes we see this and go, oh yeah, it's in a downtrend, and then you sell it, and then it goes against you. And then you buy it, and then it turns around and drops. And that's what price does. So what we want to do is maybe wait for some type of a bounce, and we want to sell the rally in a downtrend. Okay. Now I want to take a look at the Dixie, or the US dollar index. However, we don't have the index here, but what we can do is look at a currency pair that has similar qualities. In fact, it makes up the dollar currency basket, and it's called the dollar Southeastern Kentucky. No, it's the dollar Swedish kroner, SEK, right? And the SEK, if you take the SEK and you apply it up against the dollar index, you get a pretty close approximation. I think 30 or 40, like 15% of the index is the Swedish kroner. Okay, so we've got a pretty good representation here. That way I don't have to go ahead and change charts and mess stuff up. I've got this nice little setup here, so I just don't want to lose that. So we got these higher swing highs and higher swing lows, and then we have this is we had a trend line, and then we broke it. When we broke it, we bounced off some lows here, okay? And I'm hearing someone in the audience like, it's not the same, Greg. I'm like, okay, you want to see the U.S. dollar index? Okay, we'll bring it up. All right, DXY, U.S. dollar index. Okay, DXY, and then we'll do this end of day. Right. And you can see we've got this really powerful move. And we can see pretty strong trend. We can go back, and I'm going to flip back to the index, and you can see, I mean, that's how we zoomed out on that, right? And we zoom on into a daily, you can see that we've got this really very strong move up, and very little resistance to the upside. I mean, we've got some space there for some more upside, and maybe we break that and get a little bit of a move here. But we just keep moving higher swing highs and higher swing lows. The dollar is in a very strong uptrend. No matter what dollar index you look at, whether you take a look at the Swedish kroner, or you can look at the U.S. dollar index, which is the Dow Jones FXCM, the U.S. dollar index, and we can see really strong push higher, right? And it's like an equal weighted currency basket, and then we're seeing that we may be running into some resistance a little bit, and may get a little bit of a pushback here on the dollar index. Okay, maybe get a little bit of a pullback. And maybe we come back down to some fib support, maybe in the on the U.S. Dow Jones U.S. Dollar Index. It starts at 10,000, while the Dixie starts at 100. Right, so just the numbers are a little bit different. So we can see a pullback maybe to the 12,353 area in the U.S. Dollar Index, right? And I can even go. Let's see if I can go to Trading View. Let's see if I get. Let's see, it'll let me get a Dixie. Okay. And here are full featured charts here, and let's see. And so this is, so you can see if the SEK is the same. This is our chart there. That this is our daily chart, and yeah, I mean, just very strong bullish move higher. And we're coming in, we're at like 99 on the US dollar index. We have an old high at 99.70, and it's just been on a tear, guys. I mean, this is just, when we see this type of movement, that means the pound dollar is heading lower, the euro is heading lower, you know, anything versus the dollar CAD was heading higher, you know, because this is, the dollar index is been pretty strong, especially when we have things like wars, earthquakes, rocket launches, virus attacks, the dollar and yen rally, and that's what we got going on here. This is a flight to safety. People are running to the safety of the U.S. dollar. Okay, so now we look at other currencies, like we look at NZDUSD. Now we had a little bit of a rally in the Kiwi, right? We had a little bit of a bounce. We had a little bit of a bounce, and that bounce caused us to, I mean, it was a really sharp rally from the lows, because we had a the RBNZ, the Reserve Bank of New Zealand. They announced that they kept rates unchanged at 1%, and that was kind of bullish because people thought they were going to cut, and so we had this big giant candle here. But now you have a pattern, a two-candle pattern called a harami, and this is bearish. So basically it was a rally in a downtrend, and we can tell like we have lower swing highs and lower swing lows going down. It's a downtrend. So anytime we see a rally in a downtrend, we want to position ourselves to sell it, because now we're looking at, after that rejection, we can see prices maybe come back down to 63.79 or so. Right, and so we've got maybe a downward move coming our way. Right, might see a little bit of a rally on Sunday, Monday, and the holiday too. Might see a little bit of a rally. It's going to be President's Day, Happy President's Day, and we could see a rally up and then drop down. I like to get short below 64.20. So bulls versus bears. Yeah, I am bearish on this, right? Yeah. So that's okay. So Kiwi dollar. Let's go ahead and take a look at. Well, so we had the USDCAD, right? And we can see big rally in that as well, right? And we can see this is the daily, and we pull back to support. We are we had a little bit of a pullback last couple of days, but you notice that prices are going higher, right? We're still in an uptrend. The uptrend has not been violated. I mean, we had an uptrend previously back here. Price broke it and then turned into a downtrend, right? And then we broke this and now we're in an uptrend. So as long as we can hug the line, I'm bullish the Canadian dollar, and I'm looking for a retest of 133.28. So bulls versus bears. I think the bears may have won the last couple of rounds, but it looks like the bulls are gonna make a comeback and knock some bears out, and we could take 33.26, a return to the old high, and then we could probably take out that high. That was a rejection area that has been hit a lot of times. We were rejecting it, and so now we might get some. If we can cross 33.30, 33.50, then we have a nice bit of airspace, a gap. We can click it all the way up to like 34.29, and that's so I'm bullish on the dollar CAD. Dollar CAD. Let's keep it spicy, keep it rolling. Let's move on to the next currency pair. Let's look at USD JPY, or we can take a look there. And let's take a look at the trend, and we can see the trend. We broke the trend line here, and we hit some support, and it's just been really a really sloppy pattern to trade. We have waves inside of waves, and we've got a nice tag of this trend line, and so you expect a move higher, but we have a lower high. We have a lower high here. We have a high of about 110.28 on January 17th, and then we have this low here, a lower high, and and then we have some higher lows. So this like indecision, we're in this little triangle. A resolution, if we can break 110.14, we could really catch a bid up here to like 112.50, right? There's a little gap there that hasn't been filled yet, 111.02, right? So it'll be very interesting to see if we can break this resistance line. If the current resistance line holds, though, then we can see a move back down, maybe toward the lower end of the range, down about the 109.10 area. Okay, so that's on the Japanese yen. There is a lot of Japanese data. The data sometimes doesn't really move the yen. The dollar fundamentals, the dollar has been bullish, but you also have the pull when the yen usually rallies during times of uncertainty and instability. Okay, so yeah, you have two not weak currencies, but two safety currencies paired together, and it's kind of sloppy. Okay, let's take a look at another one. The other safety currency is the Swiss franc. A lot of people like running the Swiss franc when there is fear, but this one's very clear. It's that the dollar is definitely on the move. We had nice almost a double bottom pattern down about the spot 96.24 area, rallied up, broke the high of 97.64 around the end of January. We broke that, and now we're closing in on our next daily target, 98.28, and then we have some minor resistance at 99.15, and maybe a little bit like 98.73, just like a wick tag there. So it seems like we could march back up. I mean, this drop was very thick. I mean, just big red candles, and sometimes when prices hit those red candles on the other side, they fill them in, and there's two big ones right here that haven't been tested yet on this side since the trend line's been broken, and we have a downward sloping trend line that was just broken, just getting started. This party's just getting started on the dollar Swiss, right? And considering that the Swiss National Bank has interest rates at negative 0.75%, it's like, gee, do I really want to pay to put my money there? Probably not, right? So you have the carry. You're gonna be, you would earn interest. It depends on your broker. Check with your broker. They call them swaps. And that if you hold a currency after 5 p.m. Eastern time, they'll either pay you interest if you're long the currency with a higher interest rate. Okay. I'll probably do a video on that. All right. So you took a look at that dollar, GBP USD, a lot of data coming out, and we haven't taken a look at that. And let me get rid of all this stuff. Remove all those drawings. And this is a daily chart, and it's pretty choppy. I want some more data there to give me some. I need some more data here. Hello. It stopped at 2019. Oh, there we go. Okay. Now we had this weekly double bottom that was pretty, like after Brexit and stuff like that. We had this. We dropped down to the 1.200 area, and the same lows that we hit back in 2016, hit them again, 2017 almost, and then we tested it again, and we bounced really strongly. We broke a downward trend line. We would draw a trend line through there. We still have, this is from like the Brexit stuff was, people are talking about that stuff. And then we still have this long guy right here that's been, we got a sniper on the hill, and anything that comes up near is just getting shot down. Poo, 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 poo. Okay, so we need to break 34.94 to really consider this as a reversal. You might as well say 34.82. Okay, we can break that. That'd be cool for the bulls. And we did get a little bit of a rally there. It's really, it's fighting the big dollar tide. The dollar is making all these highs. And so the only thing the pound can basically do is just hold the range while the dollar is just doing its thing. We're in a downtrend, and we can connect these swing lows together. And, we've just got a trigger right there at 29.04. We break that, we can come back and maybe retest. There's a little stick sandwich here. I love seeing a little stick sandwich. Stick sandwich is when you have a bullish candle with a red candle sandwiched in between. And usually that's like they mark this in the previous chart, and they usually take price down to that area. So sometimes if you see that, that's like market makers or big institutions that have say, we would like to buy there. Basically, they put their order in. It's like Uber Eats or something like that, and they want to deliver price down here, and then we'll buy it. All right. So we'll see. Okay. Confirmation of the broken trend line. So I am constructively bearish on the pound versus US dollar, otherwise known as cable. So we're looking for that as a continuation move down. Okay. Let's take a look at one other currency, the Euro Yen. Euro Yen has kind of like put some legs underneath. It was dropping pretty hard, but it is still dropping pretty hard. What are you talking about, Greg? In fact, we broke a rising trend line. While this is a line formed 2 points to make a line. That's Geometry 101. Maybe you ditched or didn't go to school or fell asleep on that lesson, and your geometry teacher's laughing at you because you didn't, because you don't know this thing here. So you get your 2 points, and then you take 2 points and you project into the future, and look, boom, hit the line, boom, hit the line. Now, whoever tried to buy this, they got smoked. Price came back and tested the backside of the line, and now we're dropping through old levels of support. Old support becomes new resistance, so we just stair-step our way up from the lows. And we got this low 115, next low 116.99, stair step, and yeah, like a pseudo stick sandwich there, but we just broke this level of support. This was the low of November 14th, 2019, and we broke that pretty handily. But sometimes price comes back and rallies up, so I would suspect price would rallies up a little bit, and we would look at shorting the rally. We are in a downtrend. We're in an accelerated downtrend. Before it was like, okay, here we go, right? So that's our downtrend channel, right? I'm just going to keep it slightly parallel. But if you go back and see, this is a, we've been in this for downtrending for a while, right? I mean, we had a high like 137 back in 2018. Wow, what a difference a year makes, a couple of years make, right? Not really, because we were just in it, we were in a downtrend then, and we're a downtrend now. So the more things change, the more they remain the same, right? So we got this like downtrend, maybe a rally against the trend, because we actually broke this trend here. That one broke. That was a break, and then it broke and kept going up. But it just seemed like a corrective move against the trend, and now it's. I mean, we can come back and retest 115, and that'd be a 300 plus pip move down to the euro yen. Okay, I just want to take a look at another yen pair other than the dollar yen is in its own family. I think it's like the oddball out, but euro yen, Aussie yen, CAD yen seem to follow the same pattern, right? They all seem to kind of like look the same, but dollar yen, because that's dollar in it, it acts a little bit different, right? GBP, JPY, maybe something too on the short side. I'm just running through. Well, it's kind of adding some support there, right? I mean, it's kind of acting like pound dollar. So, and that's interesting too. We have a double bottom here at that 141 area. And if that area of support holds, I'm actually thinking that we would have to stay above 141.02, and we could move higher. Because it's like a triangle. Anytime you have a triangle is like a question mark for the market. Because you got bearish pushing it down, overhead supply, but you have actually buyers saying, hey, this looks like a good value, right? So if some are selling, some are buying, you get this consolidation and then finally get a breakout. You got a little bit of a breakout here, but that could be just a fake move to fake people out. Let's look at gold. Let's CFD on gold index so we can see. And I said we had a drop and we got the 2-bar drop, very strong. Now we're rallying back against this support. If things get really bad, we could see as far as the coronavirus, this is like your Mad Max trade, grab gold and just hard assets, the fear trade, and so we can actually see a retest of 1610. I mean, basically, price did not come back and retest 1534. It did not test that. Buyers stepped in. So if we have buyers stepping in here, then usually we have an extension higher. That's usually because a bunch of people are getting stopped out. But now we're looking for 1610.87, looking for the old high, and maybe a break of that high on gold. We could probably finally get out of this range we've been in for so many years, right? And let's see. Yeah, I mean 1610.87. Oh, that's a 4 hour. Now I need to go out to the weekly. I'm going the wrong way. There we go. Remember we were 2000 a long time ago, right? Yeah, I mean, see, that's that old high. 1609 was a high from March 18, 2013. And so we bust that. Then we're on our way back to, we'll be on our way back to that 1900, 2000 area. And also because people are using gold, also not just a fear play, it's also a hedge against inflation too. Okay, and I showed you in charts that we are showing inflation, a little bit inflation coming into the market. I mean, it's not the 2% target that a lot of the banks or a lot of the central banks are shooting for, but it is. We are starting to see some inflation in the pipeline. And with that inflation, people would like to run into gold. Let's take a look at oil. Let's look at WTI. I'm going to use the CFD US oil. And I showed you how many, we broke so many trend lines on this downside, and then we were rebounding from the 50 area. I was looking for a move down to 42.31, and we could still get there, but I think we're going to do some Fibonacci retracements here. And a big congratulations to JD. JD is in my VIP Facebook group, and he's showing me his trade on oil that he took. He bought the bottom. Good job, JD. I think we get maybe somewhere around the maybe 55 to 57 area. I'd like to short it, but right now I'm bullish on short term bullish on oil, but longer term, if we get in this area, I like to short it. And you can see that we have a negative draw predicted for oil as well. That's what's pushing up price. And then you might have production cuts off Russia. You know, Saudi trying to boost the price by cutting supply. So that could create some type of short term, some shortages that could some supply and demand mix causing when you have decreased supply and increased demand, prices usually go up. Okay, so let's look at SPX 500. I was thinking we got a little bit of a hit there, and we did get a little bit of a hit, but now we have moved the hit. We had a little bit of a pullback to the 200 simple moving average, 32.95, and then boom, just rocketed to a new high. Right, so the indices are on fire, and they survive. This market has survived missile attacks and assassinations and North Korea and impeachment. It's just a Teflon market, very overextended, but and don't fight the Fed. And we're in open space here. I mean, there's nothing. We're at highs never ever seen in the history of mankind, right? I mean, look at that. That is incredible, right? So, I was talking about maybe 3,400 in the S&P, and I mean that was our biggest. I mean that was a nice correction we got back in December. That was like a gift, and boom, just huge move, right? And there's so much cheap money out there. I mean, this could last for a bit. Maybe go moving down to a daily if we see any type of. I mean, we're on a daily 4-hour chart. Every dip. I mean, they're buying any dip. They're buying dip, buy. No matter what comes out, we're seeing this type of price action. If you ever get a dip like that, it's like just make a list of your favorite overpriced stocks, or look at the index. It's like, hey, you know what? I can just buy this index, and boom, they're not going to let this go down because it's backed by the Fed. There's a BFD, buy the effing dip. That's a strategy, right? And you would have been rewarded nicely. Okay, so with that, ladies and gentlemen, that is going to conclude our analysis. But I want to point to a couple of things here. Scrolling along the bottom of the screen here is my free masterclass for you to help you in your trading. If some of the stuff doesn't make sense and maybe you're not where you want to be in your trading, I've been there, I've been where you are, and I reached out to Mark Douglas, reached out to some great traders, and I invested in their coaching and their learning, and I was able to master at least do pretty well in the market. And you can too. Get you started. You're not going to be able to do it in 5 minutes, or even watching a 1-hour course. I don't claim that you're going to be a master trader after watching that class. However, it will be a step in the right direction for you to maybe unlearn a lot of the wrong-headed stuff that maybe you've learned on the internet. Internet's good for a lot of different things, for like learning how to bake cakes and stuff like that. Learning how to trade may not be a great deal to do. You need to be in mentorship or under someone who can help you. I'm a 24-year trading veteran, and I help thousands of traders around the world, help them to master trading and to reach their goals. Okay, so you go into that free masterclass, and then also if you watch to the end, I have some testimonies in there, of course, but I also have a live trading demonstration of what I do. So that's going to be in the middle. So you can fast forward to the middle, but you're going to miss a lot of stuff in the middle part of the video. Watch the video to the end. Register, watch the video. Also, the tool that I use, the market heat map, which is a range of currency pairs by percentage change, that also has the charts and the financial calendar. It's like a Swiss Army knife for traders, and I advise you to go ahead and get that. It's 75% off. Especially we've got the holiday, Valentine's Day. I love you guys because you guys are like really cool, and I really thank you for thumbs upping and liking my videos and subscribing. And again, I want to see you master trading and do well and help your families and be able to trade from anywhere in the world. One of my students is Michael. He's in Hawaii right now placing trades. He had sent me a video of some like whales waving at him, which is like pretty cool. But he was able to do that footloose and fancy free with a laptop on the beach. So it's really cool. That's a free Forex Masterclass. But you can go to mymarketheatmap.com and get my tool, See the Markets with Confidence. There's a top secret little video there. You can see more about that. And again, it's the Market Heat Map, which has heat maps for the stock indices, commodities, crypto, and Forex, and all of a sudden, and all the markets together in one heat map. Okay, and so you get an overview of the market. So instead of looking at 28 different charts, you can look at this graphical display. You also get the Trader's Toolbox, which has powerful tools like the economic calendar, like charting, like quote tables, like a Forex calculator, risk calculator, volatility, sentiment, all the tools that you possibly need. So basically, I'm trying to create a poor man's Bloomberg. Bloomberg Terminal has all this stuff, but it's $2,700 a month. This is only on sale. It's the 75% off. It's $49, and it's lifetime. Plus, you have videos, education, and $9,700 worth of bonuses that are included in this powerful tool. And I've got some really happy clients who would really enjoy using it as a core part of their research. Okay, so thank you for watching. Again, like, subscribe on that video, and we'll see you on the other side of the markets. Talk to you soon. Peace and pips. This is Greg McLeod from Forex Cash Machine signing out. See ya.
If you want to learn more about profiting from the Forex market, go to www.theforexcashmachine.com and sign up for a free training webinar. Get the secrets from Greg as he reveals how to earn limitless income. Learn more to earn more.